What would happen if the US dollar suddenly starts losing its value? Imagine waking up and finding out that your savings, investments, and even the global economy are being shaken just because the dollar is not as strong as it used to be. Many people are asking, is the dollar crashing? And more importantly, do investors need to worry about it? Hello and welcome back to Today in Finance. In this video, we're breaking down the current situation of the US dollar, why it is under pressure, and what should investors do to stay prepared. So without further ado, let's get straight into the video. The US dollar is not just America's money. It's the world's currency. Most international trade, including oil deals, big imports, and financial settlements, all involve the dollar. Even if the United States is not directly involved in a trade deal, chances are that the payment will still be made in dollars. That's how powerful it is. This global trust in the US dollar has made it the world's reserve currency, meaning that central banks around the world keep large amounts of it in their reserves. Therefore, any weakness in the dollar would not just affect America, it will affect the world's economy. Recently, the dollar has been showing signs of weakness against other major currencies like the euro, yen, and yuan. There are a few reasons for this. One is that US Federal Reserve has hinted at possible interest rate cuts. When interest rates fall, investors earn less from holding dollars, and that usually lowers its value. Another reason is America's growing debt. With the US government borrowing heavily year after year, many people are worried about how long this can continue. On top of that, more countries are exploring alternatives to the dollar, whether it's the Chinese yuan or even digital currencies. Add in global tensions, and you can see why people are starting to wonder if the dollar's dominance is in real trouble. It's important to separate fact from fear. The word crash means sudden and massive drop. But right now, what we're seeing is more of a gradual decline. Yes, the dollar has lost some of its strength, but still, it's the most widely used currency in the whole world. More than 60% of global reserves are still held in dollars. So yes, that kind of dominance doesn't just disappear overnight. So while it may be too dramatic to say that the dollar is crashing, it will be fair to say that the dollar is facing more pressure than before. Its absolute dominance may be slowly eroding, and that's what has concerned the investors. Imported goods become expensive. A weaker dollar makes foreign products more expensive for Americans. Everything from electronics to clothing and oil gets more expensive because more dollars are needed to buy the same items. This can push inflation higher, leaving consumers with less purchasing power. Families may find their everyday budget stretched further as a result. Exports become more competitive. While consumers pay more, US companies that export benefit. Their goods and services appear cheaper to buyers overseas, making them more attractive in global markets. This could help American industries like manufacturing, agriculture, and technology. For exporters, a weaker dollar can actually be good news for business growth. Relief for emerging markets. Many developing countries borrow money in US dollars. When the dollar is strong, their debt repayments become harder. A weaker dollar eases this burden, giving these nations a bit of financial breathing room. It can also make their imports slightly more affordable. Commodities rise in value. Since global commodities like oil, gold, and silver are priced in dollars, a weaker dollar usually pushes their prices higher. This is why investors often flock to gold during times of dollar weakness. It acts as a hedge against uncertainty. For commodity producers, this trend can also mean bigger profits. Other currencies gain influence. When the dollar weakens, currencies like the euro or the Chinese yuan may gain strength. This raises questions about whether the world could slowly move away from dollar dependence. However, replacing the dollar's dominance completely would take decades. Its trust and liquidity are unmatched for now. The short answer is no. Panic is never a good investment strategy. While the dollar's decline is real, it's still not collapsing. So instead of worrying about a total crash, investors should focus more on being prepared and diversified. For investors, the current situation is actually an opportunity to think globally. Instead of putting all money in US assets, it might be smart to add some international stocks or funds to the portfolio. That way, if the dollar loses more value, those investments could perform better. Another smart move is to look at commodities. Gold and silver usually rise when the dollar falls, and having a portion of wealth in these assets can act as insurance. Some investors also look at currencies directly, but this requires special knowledge and carries more risk. Bonds are another consideration. If US interest rates fall, local bonds may not be very attractive, but global bonds or inflation-protected securities could be safer choices. Most importantly, investors should remember that wealth building is a long-term game. Staying calm and sticking to a diversified strategy is far better than chasing short-term moves out of fear. Central banks around the world are key players in this story. In recent years, some countries like China, India, and Russia have been slowly reducing their dollar holdings and increasing their reserves of gold in their own currencies. This shift definitely reflects the desire to depend less on the US. However, even with this trend, the US dollar is still far ahead of any rival. The deep financial markets, liquidity, and the trust that comes with the US dollar can be easily replaced. So while change is happening, it will be gradual and not sudden. So is the dollar crashing? The answer is no, at least not yet. What we're seeing is a gradual weakening, not a collapse. But that doesn't mean that investors should ignore it. This is a reminder to prepare yourself for a change. The smartest approach is to diversify, protect wealth, and think long term. With that being said, this brings us to the end of this video. I hope you found this video helpful, and if you do, make sure to give it a big thumbs up and subscribe to my channel for daily financial insights. And I'll see you in the next one very shortly. Until next time, take care.